everyone. Welcome to the 16th Learn Livestream session. I'm Sabrina, your host, coming to you live at a truly exciting time for the crypto community. Just yesterday, Bitcoin surpassed the 100K mark for the first time, marking a monumental milestone for cryptocurrencies. Today, in collaboration with Blockshows, we'll be breaking down the market surge, analyzing top coins, and discussing strategies for thriving in these bullish times. This live stream is available on both the Bybit app and Bybit web, but as usual, for the best interactive experience, do join us on Bybit web where you can ask all of your burning questions. Now, if you tuned in the last time, you'll know that we recently switched things up for our live stream giveaways. We heard your feedback about wanting more rewards, so we're doing 2 rounds of red packet giveaways today, one for our new users and one for our existing users. For the first round, we're giving away 300 USDT to 300 new users. All you have to do is sign up for a Bybit account and click the red packet to claim your reward. For the second round, we're giving away 100 USDT to 50 existing users. All you need to do is trade at least $50 on the hottest spot listings within 7 days to be eligible to claim the red packets. We also have a Q&A giveaway where the winners of the top 10 questions selected during the live stream will get 10 USDT each. So fire away those questions. And as usual, make sure to like this video, spam that like button so that we know that you're liking the content that we're putting out, share this stream out, and let's make this a lively session. Now let's meet our esteemed panelists. First up, we are honored to welcome Emin, the founder and CEO of Blockshows. Hi, Emin. Thank you for being here with us. Could you please tell us a little about yourself and what led you to start Blockshows?
Hi, thank you very much for having me, and it's a pleasure to be here today, and I'm very excited to be with you. A little bit of background about myself. I came from traditional finance. I spent 16 years trading predominantly options and derivatives on interest rates. And then in June of 21, a few of us decided to leave the dark side and come to the brighter side. And we set up Blockshows as a business. And Blockshows is basically provider of analytics, research, and data for digital assets. We would like to provide some insight into markets to hopefully help people to make better investment and trade more actively and bring more people into this ecosystem.
Excellent. I'm sure the audience is very excited to hear more about what you guys have to share. Next up, we have Andrew, Head of Research at Blockshows. Hey, Andrew, it's great to have you here. Please give us a short introduction of yourself and share a brief overview of your role at Blockshows.
Of course. Very good to be here. As you said, I'm Head of Research at Blockshows. I joined in November 2021, the last time we had a significant all-time high, I guess. What we're doing in research is big focus on derivatives. So that means looking at derivatives metrics, providing market commentaries, insights from that perspective, as well as digging deep into the asset class itself. So tech deep dives on blockchain technology, on decentralized finance, all the protocols that make it work.
All right, thanks, Andrew. And lastly, we have Echo, Bybit Earn Product Manager. Hi, Echo, how's it going? Please introduce yourself and share with us what you do.
Hi, Sabrina. Thank you for inviting me. And hi, everyone. I'm Echo, the product manager from Bybit. I'm now the product owner of Bybit Savings and On-Chain Earn. So I'm not like an experienced analyst like Eamon and Andrew, but I will try to provide some insights from exchange perspective of view. And if you have any question regarding my product, feel free to leave your comments here and I will try to answer it. Thank you.
Thanks, Echo. A warm welcome to the three of you. And once again, thanks for joining us today. For those of you who are just tuning in, I was just sharing that we've recently switched things up for our live stream giveaways. We're doing 2 rounds of red packet giveaways today, one for our new users and one for our existing users. For the first round, we're giving away 300 USDT to 300 new users. All you have to do is sign up for a Bybit account and click the red packet as soon as it appears on the screen to claim your reward. For the second round, we're giving away 100 USDT to 50 existing users, and all you need to do is trade at least $50 on the hottest spot listings within 7 days to be eligible to claim the reward. We also have a Q&A giveaway where the winners of the top 10 questions selected during this live stream will get 10 USDT each. Now, without further ado, let's move into the first segment on what's fueling the surge. So, given the current bullish trends, what macroeconomic factors are we seeing that are impacting the cryptocurrency market? Maybe Andrew, would you like to start first?
Sure, yeah. Yeah, look, we've been thinking of this this asset class as becoming part of a macro asset class, part of that macro portfolio almost for a couple of years now. But I think that's really been unlocked by January's launch of ETFs. Now you have incredible access to this asset from a whole raft of investors that we didn't have before, almost direct access actually. I think the impact that has on the crypto asset class is manifold, not least the increased correlation that we've seen to equities, particularly US equities. I think we saw a lot of that in 2020 in the very middle, but for a very different reason. I think back then, we had a lot of people trading the 2 types of assets, so equities and crypto, but it was a very different kind of investor. It was a retail investor who was, at least in my country, locked up in COVID lockdowns with a lot of spare time, not going out spending money, and instead a lot of that capital then flooded to very home favorites like Tesla, like crypto. But now I think we're seeing the same effect of same basket, same portfolios, but from a far more institutional perspective. So a lot of macro guys in hedge funds now adding Bitcoin to that basket of assets that they like to trade.
And following your recent analysis showing a heightened interest in Ethereum derivatives despite Bitcoin's milestone, what trends are we seeing in market reactions across major cryptocurrencies?
Yeah, it's almost strange. And I'll let Eamon step in here and add to this in just a sec. But I think you'd expect a run on 100K to be met with extreme bullishness in Bitcoin, especially given the underperformance of Ethereum throughout 2024, 2023, all the way back to the merge. It's very strange to see Bitcoin leading the way in spots, but then derivatives markets really pricing in a lot of Ethereum upside, above and beyond the upside they're pricing in for Bitcoin. But when you step back a little bit and look at the actual environment that this is happening in, the post-election, it is, I think, Ethereum and other layer ones, other ecosystems with a big developer base. I think these really stand to outperform as a result of increased regulatory clarity. I think it is just Bitcoin that has had the name drop, as it were, in the election campaigns. But yeah, the signs we're seeing in derivatives markets since around the 17th of November, so about 2 weeks, just under 2 weeks after the election, coinciding with the period that Bitcoin was trading between 95 and 100 and bouncing off those 2 walls repeatedly. We've seen Ethereum futures yields increase. We've seen funding rates matched for both. So both very bullish indicators. People are very willing to pay for leveraged long exposure. But another metric we like to look at is the skew of the volatility smile. particularly at short tenors where people are taking exposure over the next week or maybe slightly longer than that, but nothing too much further. We're seeing a big demand, a big preference for upside exposure in Ethereum, which was only slightly eclipsed by Bitcoin in the few hours that it traded above 100K.
Like building on that, right, Emin, what general sentiment trends are you observing among institutional and retail investors in response to the current market surge? Do you think more people are inclined to invest or take profits?
That's an incredibly good question. I think I will be more inclined to say the sentiment overall is quite bullish because, without making it sound too cheesy, this time feels a bit different versus the previous cycles. To me, it feels like it's almost a bit of a perfect storm. There's so many different things kind of pointing towards this asset class to rally. We start off with the structural things that we've seen in previous cycles. Bitcoin halving, which post that it would lead to Bitcoin to rally. Fed easing interest rates. We've seen that post the last Bitcoin halving, and we've seen it this time around. So these are the structural reasons where you would say cyclically you would expect Bitcoin on the margin to outperform. But then you add to it some new factors that came into play. As Andrew mentioned, the ETF is one of those. And then more importantly, the change in the stance towards crypto markets in the US has been 180 degrees. We went from a very restrictive regulator towards this asset class to a much more friendly one with the new appointment. We know that the people who are in the leading positions within the new government that have been announced already, they're very friendly towards the crypto market. And I think when you combine all these factors, no wonder Bitcoin is reaching all these kind of new time highs. And the question now is that what is next, one, for Bitcoin, and two, most importantly, and this is the question that we get from a lot of our institutional clients, are we going to get this great rotation that we've seen in all previous cycles? So Bitcoin rallies, I'll take profits in Bitcoin and I'll invest in altcoins, and then I'll have that upside. It's very hard to say. I actually think we might end up in this amazing position where everything rallies. So there is no great rotation where just everything, the wave is taking everything up. And the reason being is that you might have people in certain segment in the ecosystem taking profits in Bitcoin and buying altcoins, and that will push it higher. But then you're going to have a lot of folks who are been sitting on the sideline waiting for a lot of confirmation. And I'm talking about institutional investors, be it pension funds, be it large institutional investors that step in the ETF space. They will come in and take that slack. What MicroStrategy did recently is a very strong indication that the tide has really shifted in the US when it comes to the real institutional money. So we could be in a position where actually Bitcoin could be quite volatile. We saw that last night. When people take profits, everybody gets scared and is like, oh, maybe this is the big correction. But then it bounced back up, right? Because there's true buyers in that stance. But then you will see that altcoins continue to drift higher. So it could be a very interesting times. However, I'll just caveat what I stated with this. I think the corrections could be quite aggressive for no other reason that people seen this movie quite a few times now, and they've been burnt quite a few times, and hence they are quite nervous. And as Andrew stated, what we've seen in the volatility market, actually, oddly enough, even though the options market is still skewed towards calls for longer expiries because everybody's bullish, for the very short expiries, whenever we get a correction, the skew shifts towards puts really quickly. And that means people are very nervous and they buy an insurance really quickly, right? So I think with that, what we're going to get is just a lot of volatility which makes it great for the options market. But I think if I had to take a position, I think over the medium term, the trend is still upwards for this asset class.
Mhm. Actually, building on that point, someone actually asked a very relevant question. So this person is Kingsley Malby. How sustainable is this bull run compared to previous ones, and what could signal its end?
If I have an exact answer to that question, I'll be a billionaire. Nobody can tell the future with any element of certainty. However, the only thing that we can do is to calculate the probability distribution. We say, what's the most likely thing that could happen? And as long as we get it right, more than 50% of the time, that's how you generate returns on your investment. So if the answer to that question is what's more likely, is it going to be a bearish move as the next step, or a correction and a continuation in the bullish move? I think the probability distribution is skewed towards that. In terms of where's the ultimate end, that's an impossible, or what's the top price for this cycle? I think that's a very, very difficult question to answer. Because then we are stepping into this realm where we're trying to figure out where is the fair value of Bitcoin. And in my mind, it's not very clear yet, because the market is still in this process of price discovery. So the market's trying to figure out where is the true value, where the supply and demand truly match. So all the supply from the mining activity and the sellers versus the demand from all the institutional clients, where does that price that will match the two? And I think that's a very difficult question to answer. All I can say in the near term is that the balance of probability is towards a continuation of this bull run. We might be actually just in the first phase, and we can enter into another phase after perhaps some correction. One last thing I may add is in regards to altcoins. I think Ethereum is a prime example of that. People are incredibly nervous because they know that altcoins have, well, it depends which ones, specifically Ethereum, have underperformed Bitcoin. And as such, they know if it breaks, it could be quite volatile, and they want to participate in that. But at the same time, they're not seeing the institutional demand for Ethereum like they see for Bitcoin. So this demand that is going through the ETFs for Bitcoin, we're not seeing it yet in Ethereum. So that makes Ethereum kind of a vulnerable asset, but that's why a lot of people are expressing the bullishness via options. So volatility for Ethereum are more expensive, and the skew is much higher. I hope that answered your question, by the way. Sorry.
Thank you, Emin. Yeah, I think that answered the question. Moving on, Echo, could you share insights into any shifts in asset preferences among Bybit users during this surge? How are these choices reflecting like broader market trends?
Yeah, sure. Actually, from Bybit perspective of views, users' attention are moving faster now. And what I can see clearly is that increased stablecoin adoptions. Like the market cap of stablecoin has reached another all-time high of more than 196 billion yesterday. Ethena was mentioning, which is one of our partners. They have this stablecoin USDT. It just overtook DAI's place and become the third largest stablecoin with the market cap, just right after USDT and USDC. Actually, now you can use it. Use this USD as collateral within Bybit, while you receive some extra earning up to 29% APR. What you need to do, just simply hold it, maybe use it as a collateral or use it to trade. Actually, Binance has launched a very similar stuff called BFUSD. The mechanism is quite similar. So this trend is definitely the result of some new joiners and new money coming in. And we recently also received more requests from some traditional financial institutions like hedge fund, banks. They want to partner with us. And these new players and old money, they prefer a more like stable, regulated, and reliable assets. That's maybe one of the reasons why BTC all-time high again, and the surge of some more established tokens like XRP or Sui like recently. So maybe try to diversify your stablecoin when you do trading with Bybit.
Thanks, Echo. Actually, building on that, someone in the chat also was wondering, this question is from FDIL7. How can traders maximize opportunities during a bull market on the Bybit platform? Maybe you could share more about it.
Yes, I think another user is asking like DCA strategy suitable for bull run market now. Yes, it's very useful tools. Like it's a very good bot. If you want to buy some tokens, you can use DCA. And we have another earn product called liquidity mining. It's very similar to when you do liquidity mining on chain, but you can add more leverage with these products. So when the price is increasing, you will earn more profits, and price is decreasing, you can still you are not like will be liquidated so easily, and you can earn some extra profit from the volatility of the tokens.
Thanks, Echo. All right. Thank you guys for those insights on the macro picture. Now let's just zoom in on the stars of this market rally, the top trending coins of the past month. So we're talking about the likes of XRP, Taunt, Sui, Solana, and Doge. So yeah, let's just move on. So XRP has recently overtaken Solana and USDT in market cap, propelled by developments around Ripple Labs' new stablecoin RLUSD and anticipation of an XRP ETF. How do you see these developments impacting XRP's derivatives market dynamics and its adoption in traditional finance sectors? Do you think that it would also boom in popularity like Bitcoin ETFs, or would it sort of slow down just like what we saw with Ethereum ETFs? What do you think, Andrew?
Yeah, Ripple has done incredibly well. I think one of the leaders of this so-called zombie coin resurgence. A lot of coins people loved back in, I think, 2020, 2021, climbing back up the sort of leaderboard back again. I think the news is incredibly positive for them. I think it's a perfect example of what I was mentioning slightly earlier. A lot of these layer ones, a lot of these things with ecosystems, but especially a lot of these coins that were previously under a bit more scrutiny by the SEC, really now have a chance to outperform in this, 180 in the regulatory environment. But touching on Ripple in particular, it speaks to this incredible demand for stable coins in crypto. I think this is one of the most basic and most popular use cases for decentralized finance. If you look at the top 10 cryptocurrencies, many of them don't post returns on the day because they're stable coins. They are pegged to the dollar. So really tapping into that demand. As Echo said, that hit an all-time high in the last month alongside Bitcoin. But I think what this new regulatory environment opens up is the path to the sort of second generation or the next steps in stablecoins. So no longer just assets pegged to the dollar, which are fantastic, democratizing access to the dollar, but I think don't offer the same sort of yield that institutional perspective is demanding. So I think it opens up the use case to a whole raft of tokenized assets on chain. This is a theme that was talked about a little bit before in the run up to the election, but I think is in particular unlocked by the election and the outcome. So evidence for this we see in tokenized gold, in tokenized bonds on maybe more private blockchains. I know HSBC are offering this at the moment. It's a digitally native bond, so and then a whole raft of similar products from a lot of the familiar names from ETF providers in the US. So I know Bybit have, BlackRock have a very similar product. In terms of the ETF, very difficult to say. I think had I tried to make this prediction ahead of the Ethereum ETF, I would have been completely wrong, or I wouldn't have been able to tell you what eventually happened. In the first couple of days of the Bitcoin ETF, it was one of the fastest launches in history. That precipitated the all-time high in March. We went to 73K on the back of those inflows, and then they tailed off until like mid-September. So what that looked like was really opening the tap on this institutional demand to just come flooding in. And then once that was saturated, I think we sort of went sideways a little bit. And then in the summer, when we had the Ethereum ETF, you might have expected the same, and definitely derivatives markets were pricing for a very similar sort of outcome. But we haven't really seen, or we didn't really see that demand flood into Ethereum until a lot later in the year. More recently, actually, I think it was only in the last couple of weeks that we've really seen sizable inflows to Ethereum's ETF. So maybe that's on the back of bullishness around the ETF. You have retail and institutional participants flooding in on the back of the news. Potentially it is evidence of this pet theory that I think a lot of people have, that people are using the ETF to capture the so-called basis, where futures yields trade above, futures prices trade above spot. What we really saw was the ETF inflows switched to Ethereum around the same point that Ethereum started to offer a higher basis than Bitcoin. So tough to say what that means for a Ripple ETF. Is there this institutional demand for yet another? I think the use case for a Bitcoin ETF is obvious. I think the added value of Ethereum on top of Bitcoin is slightly harder for institutionals to digest and to come to terms with. But potentially Ripple's slightly more embedded in the fabric of these institutions would make it a slightly more attractive prospect. Far too early to say, in short.
Yeah. Emin, do you agree with what Andrew said?
No, I totally disagree. I'm only joking. No, I of course I agree. And in fact, I see the evolution of these particular coins as being as uncertain as it could be, which, by the way, opens the doors wide open for derivatives. And the reason I say that is because not only the market for these altcoins is in the process of price discovery, the market is also in the process of utility discovery. They're trying to figure out what each blockchain or each token is going to be most useful for. And in that process, things could take us by surprise. When we figure out a very unique and important utility for XRP, for example, then the price could actually surprise all of us, because it could have this regime shift where it will just go to the next level that it's meant to go to. And in the meantime, we could just go through this periods of volatility. XRP is quite a unique one, because we know, for example, there are certain regions in the world, and more specifically, there's one particular country in Asia that are an insanely heavy users of XRP. In fact, they are the top consumers of that particular tokens, because it answers a problem that they face in a local entity. And that's a utility that when XRP was originally created was not meant to be for that, yet the market found a use for it, and all of a sudden we ended up in this position. So I think the market as a whole is still in the early stages in some of these protocols. And especially now we're trying to figure out how the institutional adoption of these tokens are going to take place. It could be a very interesting time. I think derivatives on these assets are going to become even more important, because people will find a way to be able to hedge against these perhaps large moves and large corrections. In terms of the ETF, It's very difficult to say. I'm not entirely sure what the US regulators are actually thinking about the rest of the ecosystem in terms of crypto. We know they already passed a judgment of where Bitcoin sits. We know what they think about Ethereum, but it's going to become very harder and harder each time to see what they think, whether a particular token is a security or a commodity. In terms of the regulations that or the rules that already been passed by Congress and the Senate, we have some rough idea what they think, and they gave us some certain metrics. But actually, for some tokens, these metrics are not good enough. We need even more explicit metrics to define them. And I think until they do that, it's going to be difficult for them to give the thumbs up for an ETF. So, look, I don't have any insight more than the average person on the street. But I think is going to be difficult, or I will be incredibly surprised to see an XRP ETF in the near future. But it doesn't mean that we wouldn't have it. It just means that we could actually lay the ground for it, and the market will price for it before we even have it, which we saw the same thing with Bitcoin, by the way.
Thanks, Evan. Okay, Echo. Ton's integration with Telegram has exposed nearly 900 million users to blockchain technology. With the popularity of tap-to-earn games such as Hamster Combat and Notcoin on Ton's platform, what long-term impacts could this trend have on Ton's ecosystem and user engagement?
Yeah, sure. So everyone knows the hamster and dogs, this kind of Tom-related protocols that they receive a huge success in last round of airdrops. And also we were Bybit working closely with dogs, and we engage a huge number of users from that marketing campaigns. So actually many like blockchains and exchanges are struggling, like how should we bring new retail users in to crypto world. And Telegram definitely become a game changer. So it's very user friendly and easy to use. It's a very efficient entry for these non-crypto users. Just few clicks, play some games. You don't need to download any apps. We already seen some protocols and exchanges build applets on top of Telegram, including us. We have like the Bybit Web3 wallet. And beyond Telegram, there are like TikToks and Twitter. They're also driving trends. Like just see how many meme coins are built on top of TikTok topics recently. So I think in the future, this kind of social platform will definitely become major battlegrounds for user engagements, and just keep following that.
Thanks, Echo. Right. Considering Sui's recent price volatility and its new all-time high just yesterday, how can derivative strategies be utilized to manage the risks associated with such rapid price movements? How do these strategies align with the broader trends of derivatives usage in stabilizing market perceptions? Andrew.
Yeah, thank you. Yeah, just to touch on Sui, for example, alongside Solana, I think both doing incredibly well at the moment. Again, more layer ones with ecosystems, with a community of developers now unlocked in the US, able to push into this space and start building stuff. This is, I think, in my view, ultimately where these chains really derive their value. Okay, you have the speculative value that, like you rightly said, is very volatile in bull markets, in bear markets, goes up and down. But at the end of the day, these things survive with an ecosystem. They provide value to people. They solve a use case. In Ethereum's case, for example, that's unlocking this this ecosystem of decentralized finance. I think Solana and Sui attempting to do the same, but from a very different perspective. On Solana and Sui, you have a whole raft of decentralized applications, including gaming applications, which I think originally on Bitcoin would have been a pipe dream, right? So I think ultimately the performance of these tokens is highly dependent on how they are able to eke out the market share between the three of them, as well as all the other so-called Ethereum killers. Ethereum's not dead yet, clearly. In terms of derivatives, I think we're way too early to really make a good comment on this. Sui and Solana, well, Sui in particular has a derivatives market made up of perpetuals only, right? So it's this linear instrument where you can take exposure in the same way that you can take spot, but with a little bit of leverage. The use case there is not massively unlocked, whereas, you know, we are options guys. We really like thinking and talking about options, volatility, that kind of stuff. That's what's really unlocked. Solana, for example, which has seen incredible growth. I think still a smaller side of the market compared to the incumbents, Bitcoin, Ethereum. But I think during this bull run, we're seeing a sort of unlock of demand for Solana options. Right now, the market's essentially just following Bitcoin and Ethereum. So what does that mean? It means big demand for call options, leveraged exposure to upside. But I think that's a market that will become very important on the other side of this cycle, where we see people doing the same thing we're seeing in Bitcoin and Ethereum now, which is hedging against pullbacks on the way up, and then taking exposure on the downside as well. So in short, I think these markets will only be unlocked by derivatives markets. If Solana, if Ripple, if anyone gets a ETF, we've seen it shown that these guys are willing to implement a derivatives market around those options, which only benefits the incumbents in the space. So we expect to see far more activity on the back of these Bybit options, for example, in crypto native, so on Bybit as well. I think that exposure gets hedged there and adds to the volumes for everyone. So the more activity, the better. But what we've seen is that they're very willing to implement options markets on these other altcoins once they have this ETF. So this is one way that centralized exchanges, for example, will distinguish themselves, I think, in the future. Touching on this point of looking for offering exposure to these other assets. I don't think they're just bull market assets, instruments. Sorry, I think they definitely all-weather instruments for sure.
If I may, I would like to add something really quickly on this in terms of how derivatives markets. Hopefully, we should see them react to this. I can just share with you some of my experience trading options in traditional assets, and especially in emerging markets, which, in my view, crypto resembles that quite a bit. Actually, when you get this kind of aggressive rally, oftentimes what could be quite interesting is to sell out of the money calls. Because as Andrew said, a lot of people get bullish, so they will push the volatility higher, but they will push out of the money calls even higher. And what happens is that for the folks that hold the asset, they start think to themselves and they say, well, okay, where would I take profits? So they will pick a level and they say, well, instead of waiting for it to get to that level and take profits, I'll just sell a call at that strike, such that if it gets to that level, it will kind of get me out and I locked in my profit. But on top of that, I get the premium as a yield. And it becomes a very, very attractive trade. Right now, for example, in Bitcoin, before I move on to altcoins very quickly, but in Bitcoin, if you sell a February expiry 120 strike, 120 strike, you get around 5%. So for somebody who's holding Bitcoin and he says, I would take profits at 120 anyways, selling a call, that means it will make them another 5%. And if you don't get to your 120 level, you'll make that 5% anyways. And that's why, at least in traditional markets, people love that kind of trade when they got it right. They hold the assets and the market is rallying because the options market is working in their favor. Now, in altcoins, that's even more interesting. Because a lot of the times people might actually have no way to hold the underlying assets. Like, for example, for Solana or Sui, maybe some of the institutional guys rather trade the option than hold the underlying assets. And that makes the options market even more extreme and the trade becomes even more interesting. We don't have an options market for Sui. I would love to see that. I think that could be quite interesting because I think Andrew is right. What this new protocol is trying to provide is slightly different and not necessarily competing with Solana for the DeFi space, but also providing this whole other protocol for gaming that focus more on speed. It could be quite interesting time, right? But yeah, just something different to add.
Thanks, Evan. Okay, let's just move on to the next cryptocurrency that is a star of this past month. Doge has remained a popular yet volatile asset. How does its derivatives market react to social media trends? And what strategies might derivatives traders use to navigate this volatility?
Yeah, absolutely. But I think a very similar answer. Ultimately, the derivatives market for Doge is incredibly restrictive at the moment, limited to perpetuals.
Ooh.
I think once we start to see a fully fledged options market for Doge, you unlock far more efficient price discovery. People are able to take views. But also, I think what we see is, I guess at least traditionally, is that an options market for something as volatile as Doge can almost result in a sort of suppression of that volatility. So I think we've seen this happen over Bitcoin's life cycle. Volatility in general has been trending down from, I don't know, where would it have been historically, like 80%, 90% annualized volatility. And now post-election, front-end term structure is massively inverted, up at like 70 only, and then longer tenors between 50 and 55. I think part of that is a lot of people coming in and implementing strategies of the type that Eamon mentioned. So selling those out of the money calls, becoming a provider of volatility, increasing the supply of volatility, and then hammering down that a little bit. So it's quite an interesting question as to whether that would happen for some of these higher vol coins like altcoins, like Doge, like maybe not SWI, but definitely a whole raft of other meme coins that we've seen emerge in this cycle. Dogecoin is just the most famous, right? And the most, I guess you could call it a legacy coin at this point. But I think we're starting to see the first signs of this. So Solana now has an active options market. I think there are some places you can find Ripple, but yeah, we've heard talk of altcoin volatility across the board. So something like 500, 600 coin pairs being quoted, which I would definitely not like to be the one responsible for providing a price for those, but some crazy people are. I think the issue with something like a meme coin industry or a meme coin category is that demand for these tokens changes so frequently. It is the task when, as a meme coin investor, is to find the meme coin of the day in a lot of cases, where capital is rotated between coins incredibly quickly. You see someone take 100x, 1000x returns on one coin, and then the next day that's far, far lower as that capital gets rotated into the next coin or the next coin. This is one of the reasons that we see this volatility, but not just volatility, it's volatility of volatility. The volatility is itself volatile because you either have this sharp spike or you're going sideways at like $1 or at zero in a lot of cases, which I think makes the job of market makers incredibly difficult because you are looking for something that has a somewhat stationary process. Something whose properties doesn't really change day to day. You have volatility, but at least the volatility is somewhat stable. I think that has been historically the reason that market makers have found it difficult to come into this space and start providing liquidity. The real tough part is finding a volatility surface with a bid-ask spread that is somewhat reasonable. A lot of the ways these market makers come in and provide that liquidity and hedge their own risk is just by charging a very, very wide spread on options. As we see more and more people become comfortable providing that price or quoting that price, I think that spread will become narrower and narrower. And that's only going to drive more demand for these things. It's sort of almost like a self-fulfilling prophecy, where the price becomes tighter, more demand, market makers feel more comfortable quoting that price, and then you get volatility coming down as well, and then it sort of reins in this bizarre, crazy asset class into something a little bit more, if not manageable, modelable. You can talk about it in some reasonable sense.
I'll just quickly add something to this, and I'll try and be very brief because I am aware of the time constraints here. I think actually meme coins, it's a very interesting, almost an asset class by itself. Because even though the token itself might not provide any direct utility, so all of a sudden you can separate it from the other cryptos where it seems like there's a use case, whether it's Ethereum or Bitcoin in one end, or even some of the other layer 2 tokens where there is a use case for that particular token or utility. These seem to be, especially the extreme meme coins, have no utility to them at all. However, I don't discount their existence as an asset class because I see it as a subscription to a group or a space where people can come together and say, we believe in whatever it is. It could be a fun thing. It could be a genuine motive or a goal or whatever it is. Sometimes it could be quite legitimate, even with Doge. I view it as somebody showing their thumbs up or their vote of confidence in what's happening in that space. It's like if you say, I support Manchester United, you buy their jersey around the globe, right? So there's a group of people doing that. That's what I see meme coins are doing. One thing that concerns me about them, however, is that their volatility and the craziness that's happening there with some celebrities or some, TikTok celebrities launching their own meme coin and creating this hype and then the crash. That kind of volatility we don't need for the rest of the ecosystem. If the rest of the ecosystem is to grow up and actually be more institutionalized and bring kind of more calmer regulations, because the last thing we need is some crazy mishap in the meme coin side of things that shake up the rest of the ecosystem. I don't think it's big enough to do that at this stage, but that's the kind of things I'm looking at to kind of just make sure that there isn't anything that could perhaps cause us to, like we've seen in the DeFi unwind in 22 that kind of escalated and led to other mishaps. But at this stage, we don't see that. We think it's actually a genuine asset class that I would love for it to grow in a more professional way. I like this way of kind of voting on an idea or on a particular group going forward. And of course, the more volatile it is, the more of a reason, as Andrew mentioned, for derivatives markets to come into play, because there's ways for you to issue structured products around it and create a huge amount of yields and volatility. As annoying as it is for some traders, it's greatest for market makers, because that's how you try and capture some of this bid offer in the trading space. And one last thing, very briefly, what happens oftentimes, you can think of it, if we try and compare this whole ecosystem to traditional markets, and you can take like Bitcoin as gold, and then Ethereum as some some equity or some oil comparison, and then you just go down the spectrum until the meme coins to be kind of like a very illiquid emerging market. What usually happens in traditional markets is that when you have a massive inflows into the big asset, people take profits from that and move to the next one and the next one and the next one, and eventually everything kind of like filters through like a domino effect to the very illiquid asset. And that could happen in this round as well, if that makes sense.
Okay, sorry to interrupt. Actually, I think Andrew and Eamon provide some very interesting thoughts regarding the meme tokens. I'm actually a meme players. I'm not like a derivative traders, but I'm a spot traders and meme players. So and I noticed that the Coinbase, which is compared to us, is a regulated exchange instead. They have listing quite a few meme tokens or put this meme token on their roadmap recently. So I want to ask Eamon and Andrew, what's your thought of that? Or does it shows any like future signs? And what's your thought?
Yeah, I think actually that's a very positive sign that it's indicating that the market recognizes this as an asset class. As crazy as it is, because some part of it is quite crazy, right? Some of the really crazy meme coins. But I do think it will be a fantastic way to show your allegiance, or to kind of show a vote into a particular idea or a particular program or a particular asset. I think that's an amazing way of kind of representing that. And having some of the regulated exchanges listing some of these tokens is a clear indication of the recognition of it as an asset. Whether you disagree with it or not, it's not up to you. The market has already decided that it's there and it's there to stay, and that's it. So I think that's a good thing, and I think the more liquidity that we have on these assets, the better, because at least that will limit some crazy moves, even if there's some kind of collapse of a particular token. Like there's a TikTok star that launched a token that went to 500 million and apparently just collapsed to 60. I'm pretty sure everybody's aware of which one, but that kind of volatility, it's quite, as long as it's manageable, it's fine. We just don't want it to kind of create a domino effect towards the rest of the ecosystem. So having bigger exchanges, and the more exchanges, bigger or small, that provide liquidity for these meme coins, which the market has already recognized as an asset, is a good thing, in my view.
Thanks, guys. That was Andrew. You had something to add on?
Yeah, I was just going to agree with Eamon. I think, yeah, given the ETFs, I think even Coinbase feeling the heat of needing to find some other way to differentiate themselves from, just traditional Bitcoin offerings. I don't think it means we're going to get like a Pepe ETF anytime soon. But I'm very happy to be proven wrong on that. Yeah.
Why not? I can't wait for the day for that to happen. That would be great.
I would expect that, definitely.
All right, thanks, guys. There was definitely a deep dive. We'll quickly move on to the last segment before we look at questions from the audience. First up, how effective are derivatives in hedging against potential downturns? Maybe just a quick one from Emin.
Yeah, incredibly effective. And in fact, in the traditional markets, that's why derivatives actually become multiples of times larger than the underlying assets. And we're talking in terms of volumes, sometimes 100 times larger than the underlying assets in terms of market cap. But that's because they are incredibly effective in allowing you to hedge some outcomes in the future, which gives you more ability to plan your future in terms of investment, in terms of cash flows, if you're a company or you're a corporate treasurer or you're an investment firm. So derivatives are incredibly important, and options specifically, and futures to some certain extent, but options, they are incredibly important. If we just kind of take a step back, what is an option? An option is just an insurance contract. And as we know in any other part of our society, insurance is very important, right? So insurance against anything allows you to kind of grow that market. So I think derivatives are going to take a much bigger role, especially when larger institutions come into the space. I can share with you, just even like on one end of the spectrum, the very boring strategies, and then I can take you to the other end of the spectrum with the slightly more exciting stuff. So in the boring end of the spectrum, you can have a large asset manager, like a sleepy asset manager, like a pension fund, where they will buy the asset and they want to hold it, and they want to hold it for a long time. So they're not active traders where they buy and sell, buy and sell. So let's say they buy it via the ETF, right? What will happen is that they will go, let's say the market rallied like now, instead of selling the asset, what they will do is they will buy some puts because they want to lock in some of that profits that they make. But sometimes when the market is also rallying, what they will do is they will increase their returns by selling out of the money calls. This allows these asset managers to do two things. One, not to sell, which is a good thing for the market because you don't want to dump a supply of stuff, especially from really large asset managers. Two, it allows them to invest even more. When I have the security of being able to hedge some of the tail risks, then I have the confidence to actually allocate more capital to that particular investment. So that's one end of the spectrum. At the other end of the spectrum, we can get actually involved in very interesting products, so-called structured products. These are products that allows you to generate higher yields and brings even more capital to the whole ecosystem, and it allows for more hedging and more liquidity overall. What I mean by structured products, they sound complicated, but in reality, all they are is basically a structure that sells a bunch of optionality based on your view. So, for example, let's say your view that Bitcoin will stay between 100 and 150,000 for 3 months. What you could do is you can sell the put on 100 and the call on 150 and just earn yields. So people will say, all right, come and invest in this asset class and you will earn more yields. And those derivatives allow for more capital to flow into this space and then more liquidity overall in the exchanges. And that helps grow the market. So by far, I would say the derivatives market is in its early stages in crypto, and I think we could be incredibly surprised how big it will grow over the next year or two.
Definitely.
Yeah, I want to add on regarding what Eamon says, because I'm a product manager from Bybit Earn. We have a sector just called Bybit Structured Product. We have like dual assets, double wing, smart leverage, etc. It just we use derivatives like futures or options and spots to build that, and you can find like under whatever market condition, you can always find your right tools to earn profits. So come and try it out. And thank you, Eamon, for mentioning that.
All right. Thank you, guys. Right. We'll just take a quick look at some questions from the audience before we wrap up this live stream. Unfortunately, we're running out of time. But yes, let me just take a look. Okay, so there's this question from Billy. Is institutional adoption key to crypto growth? What do you guys think?
Very good question. And quite frankly, I don't know. And I'll tell you why I don't know, because in my view, well, actually, let me take a step back. I think it can only be positive, but I'm not entirely sure if it's the only driver. I think it's one driver for the growth of the crypto asset class, but I don't think it's the only driver. I think the retail community is just as important, if it's not more important, and the jury is still out. We'll find out which one is going to be more important in the future. And this is one of the most exciting things about this asset class. For the first time in history, we have a plain level field where everybody in the world could participate in an asset class, be it a hedge fund in London or New York, or be it an individual on a beach somewhere in a exotic island. And collectively, the retail community represent just as much liquidity as the institutional ones. The interesting differences between them might lead to price volatility, because the institutional wave flow happens in chunks, and it could be big tickets, and it could lead to kind of aggressive moves, while the retail participation could happen over a period of time, and it could be actually quite diverse, where there's a lot of sellers or a lot of buyers, different views between people around the world, and you have a more stable price. So to go back to the original question, which I think is a fantastic one, all we know is that the institutional adoption of this asset class is a major confirmation that this is not only is an asset class that is here to stay, but it's going to actually revolutionize the legacy financial system, and it's actually going to take us forward rather than push us backward. And I loved actually the Financial Times article today, where they actually had to write an apology for making smalls of the crypto community for years, and eventually came out and they said, okay, we actually respect it, although they worded it in a slightly different way. What that means basically in my mind is that the traditional institutional space has accepted that this is an asset class that here to stay, and that can only be positive, but I don't think it would be the only driver.
Thanks, Evan. We'll have just one more question from the audience to wrap up. So this is actually directed to Andrew. It's from someone named D. The email starts with DEH. Hey, Andrew, as an experienced analyst, what's your rule of thumb for new users in terms of risk management in this bull cycle?
Incredibly good question. I think we're big proponents of the risk management side. Have your fun, but make sure the downside's protected too. Of course, yeah, we're big proponents of options too as a risk management tool. Primarily because options allow you to do this in a very bespoke, far more capital efficient, leveraged way. You're able to identify your exposure to different aspects of the market and hedge them individually. But I think what's incredibly important with options is understanding the risk profile of an option. So as options traders, we like to talk about options Greeks. So this is how much money I'm making or losing when this happens, or when spot goes this, or when volatility, for example, goes there, or in the most extreme case, I mean, as time passes, how much money am I making or losing if nothing happens? I think options are an incredibly good tool. We've spoken about that many times over this live stream already. In a bull market, I think the common adage is everyone is right in a bull market. So I think the point is be a boat that's buoyed by that tide without taking on risks that sinks your ship, I guess. So find ways to mitigate the downside while enjoying participation in the upside.
You, Andrew. All right, and that wraps up our live stream. A special thank you to Emin, Andrew, and Echo for sharing their invaluable experiences and knowledge. There are actually many questions on the live chat, but unfortunately, we're running out of time. We would love for you guys to join us for a part 2 in future. Yeah, and so of course, please note that none of the topics discussed today are financial advice. They're all for educational purposes. Thank you once again to our panelists and to you, our audience, for tuning in to today's Bull Run Breakdown. For more information, please visit our Bybit Learn website and check out our latest Bybit X Block Shows report for more detailed findings. And don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, so just keep a lookout. Let us know what are some topics that you would like to hear more of, and we'll see you at our next live stream. Stay tuned to our social media platforms for more updates. Thanks again, and see you next time. Bye-bye.